Good afternoon, Chart Spartans. We have a very special day today because there's a breakout in the gold miners. Time to hold on to your mining hats. This is something that I've been watching for a while now as the gold miners have been consolidating within this bull flag. But today we break up and now let's assess the big picture. So this is a log chart for the gold miners so it can contain the price movements a lot better. And if we look at this arc of support, we see a lot of touch points across the past 10 years. We did break down in 2020, but that was during the March 2020 liquidity event during the coronavirus sell-off. And that's where all assets were selling off. So we can ignore that and call that a false breakdown. But essentially, we have a picture of a very supportive arc pattern. And now that we're breaking up, the trend is higher. The reason I think this is such a powerful chart is because look at the amount of time that we have been consolidating. There's been 8 years of consolidation under the 52 level on the GDXJ, and that's just energy that's been stored up. Price has been correcting, it's been consolidating, it's been coiling, and it's been buying time. That is stored energy, laterally stored energy, that when it breaks out will be explosive. And I think that's what we're starting to see now. We did get an initial breakout in 2020, which was very exciting. But since then, gold and the miners have been in the doldrums with a 33% correction over the course of 8 months. Now, that's a very long correction in terms of duration. And lateral corrections like that are incredibly bullish. It's more of a correction through time than through price, even though we did get a small correction in price. Now, we've broken out of the bull flag, which I'm sure many of you are aware is very encouraging. Where can we expect to see price end up in the next measured move? Really, we don't have much overhead resistance here whatsoever. You could look at some small resistance across here at the previous highs, but I don't think that's going to be much of a challenge whatsoever, given the amount of time we've been consolidating for in under the 52 level. So really, the next level of resistance I'm looking at is probably around the 100 mark, which would almost be a 100% move from current prices. Now, we can also measure, if we measure the length of the leg up to the bull flag and then move that up to here, it kind of gives us a similar point, a similar reference point. Around the 90s to the hundreds is where I'm expecting price to reach. At which point we could probably expect to see another one of these bull flag corrections before the home run up to all-time highs. For now, though, I am only concerned with this move, which should be an explosion in price over the next 5 months. I think in the long run, we're looking at this, but right now, I'm concerned with this. And I've mentioned on my Twitter account that the GDXJ has become my home for the past 3 months. Because it's an index, we don't have to worry about the idiosyncratic risk factors with the individual stocks, such as poor management or geographical issues. This is as safe as you can get. I mean, you're not going to have as much upside as you're going to have with some mining companies, but this is something you can just buy and go away. When I say you, I'm talking about me. This is not financial advice. Over the past 3 months, all of the profits I've been making in other trades, whether it's commodities or cryptocurrencies, I've been taking out and planting in the GDXJ. This is my savings account. This is my bank. This is my home. Now, this is going to be something that I'm going to set and forget for the next 5 months. In October, I might come back to this and revisit it, or if, in maybe a couple of months' time, I'll revisit this. But right now, the picture is incredibly bullish, and I'm very pleased to be in this trade. Would I be buying it now? Well, if I didn't have any exposure to gold or gold miners, yeah, I might be buying. But really, this was the buying point down here when you had a confluence of support with the arc and the bottom of the bull flag. Now, this, you can still be buying this and it be a fairly safe trade. I actually think the GDXJ is probably one of the safest in terms of risk reward trades at the moment. I do still like crypto, and I think that crypto can double or triple over the coming months, but that is incredibly risky, and there is a lot more downside, in my opinion, in crypto than there is with gold and the gold miners. In terms of downside, maybe you could see a correction back to the arc of support, maybe a little bit more if we get a big washout, but really I put the probability of that very low. And the probability of a breakout higher, 100% move, I put the probability of that quite high, maybe 70%, 70-30. So that's why I really like the gold miners at the moment. And I think with the weakness we've been seeing in the crypto, I think a lot of people that have got into investing through crypto for the first time are maybe waking up to the virtues of gold and silver. Obviously, gold is the first port of call for new investors, but the miners have more upside, and that's why I prefer them. So this is something I'll be monitoring over the coming months, but I'm not going to be active in it. This is a set and forget trade for me. So I hope that's helped you out. We've given you an overview of the gold miners, and good luck with your investing.